Let's shift to the home decor space. We've got Hindware joining us on the show, the management. Mr. Sandeep Sikka, the Group Chief Financial Officer of Somani Impresa Group, that's Hindware, joining us on the show. Thank you so much for your time, Mr. Sikka, and good to be speaking with you.
Yeah.
After a challenging FY26, which we understand was marred with raw material volatility, there was unseasonal rainfall, subdued infra spending. How has FY27 begun? Can you give us a sense of how it's playing out on ground?
So Q1 has been good for us. We have, sort of mid-teens growth on the bathware business, which constitutes of sanitary ware and faucet. Uh, but overall, when we see there are some challenges in terms of inflation, but given our brand strength, given our distribution reach, and given our commitment to service our products and the quality products, we have given a guidance sort of a 15 to 20% growth for FY27, which we are fairly confident we should be able to maintain. Some of the quarters may be challenging, but we are confident about it.
All right, so confident of maintaining your full year FY27 growth guidance. Hi, Mr. Sikka, this is Meryl D'Souza here also joining in. Can you just tell us, post your fourth quarter results, you told your investors that April had begun on a positive note for the company and that the pipes business is reporting a 50% year-on-year growth in the month of April. Can you tell us how first quarter has been for you across business verticals?
So even on the pipe business, the growth has been good, both on the volume terms, since we are in a period where I can't disclose the numbers straight away. But the trajectory is good, but margins under the pipe is under the pressure because of the volatility on the input resin prices. Given the global crude fluctuation, which is happening due to the Iran crisis, the market uncertainty on the resin price, which is a pass on to the CPVC and the UPVC market prices. So that's creating pressure on the margins in the pipe segment. But other than that, the momentum of the sales growth is there. Uncertainty on the dealer distribution side on the pricing of the PVC prices is there. But I think over a period of time, this will get settled down.
Understood, but while we are hopeful of the raw material impact getting better in the future, Mr. Sikka, once again the West Asia conflict has resurfaced. How are you assessing the impact on raw material price volatility? And on the back of that, can you talk to us about the pricing action that you have taken so far to try and mitigate this impact, and how much more do you think you'll have to take?
So I think in terms of optimizing and de-risking the fluctuations, keeping lower value of inventory is an approach, because our business is not to take punt on the like what will be the prices going forward. So we are trying to optimize our inventories within the plants on the pipe side, especially on the PVC resin prices. Apart from it, we are taking a number of initiatives to cut down the cost, because price is very critical for the pipes market. And a major chunk of profits which are there is in the optimization of the manufacturing cost. So we are focusing there, and we are given guidance there on the market, and which we hold, which should be able to continue.
All right, understood. Sir, can you also tell us about how demand has been shaping up for you across your domestic and international markets? Has the demand sentiment kind of taken a knock?
Right now, demand is good, because if you see a lot of our business activities, hover around on the completion of the various real estate projects, especially on the bathware business, because the sanitary ware and faucets are the last pieces which get attached to the construction of the building. Many of the projects which got started in 22, 23, 24, they are near completion, and we are seeing a good demand even on the institution side. We have a good order book, more than 500, 600 crores, which gets implemented over a period of time, which takes around 12 to 18 months. But the order book is getting stronger day by day on the institutional side.
Okay. Mr. Sikka, can you give us an update on what's happening in terms of the demerger of your consumer business? In May, you did say that it was down the line about 1 to 3 months. Can you give us an update on where the NCLT approval stands? What's the listing timeline?
So I'll say almost 99% of the activities are done. We are waiting for the final NCLT Kolkata order on this. And the next date is scheduled for 6th of August. We are fairly hopeful that we should get the demerger order on that day.
All right, sir. And back to your business, you expect the consumer appliances business to become EBITDA positive from the first quarter of FY27. Now, given how FY27 has panned out for you so far, is this still on track?
Yes, a lot of initiatives done on this. If you see in the past, most of the seasonal businesses which were causing losses at the bottom line and also the EBITDA level, they have been shut down in last 1 year. And the focus is growth of the kitchen chimneys and hobs and the ancillary stuff which we sell. This is a much bigger market which we can address to, and we have a leadership position. We are amongst the top three, chimneys producer now, and we see the good growth happening here. And once we reach a threshold of, let's say, run rate of around 400, we were definitely, PBT positive on this.
Okay, sounds good on that note. But Mr. Sikka, your newly commissioned Roorkee facility is ramping up as planned. What will the incremental contribution be from the second half of this financial year? If you can help us quantify that, either in terms of volumes or what the revenue contribution will be.
So we've given a guidance on the new plant, which is at Roorkee, which has a capacity of 12,500 tons. We are given by Q4, we should be able to load the plant to a level of around, let's say, 65 to 75%. And since this is a rainy season, there are some seasonality involved in the pipes business. So Q4 guidance we already given, and we stick to that.
All right, sir. You've also spoken about reducing consolidated debt for the company by about 30 to 40% over the next 2 years, and this will be using operating cash flows. Can you help us with where your debt stands currently and what is the target level that you are working towards? How much of a reduction in finance cost that would translate to?
So we have a consolidated debt today of somewhere around 700, 725 range. This year repayment is a much bigger chunk, which we feel that debt should come down by around 70, 80 crores this year, and balance debt should come down next year, primarily through the internal accruals which we earn.
Timeline sounding good, and your path to becoming debt-free also sounds very good, Mr. Sikka. On that note, thank you so much for your time today.
Thank
Good to
you.
be speaking with you. And yes, good luck on that demerger, 6th August. I'm going to remember that date, and hopefully we'll interact at that time again. Looking forward
Yeah,
to
sure.
that
Thank you.
conversation. Thank you so much.
Thank you.